Good morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. A rebound in biotech firms helped US indices recover and continue their rise after a short stall on Tuesday. The Wall Street was aided by Merck & Co. adding 2.3%, Regeneron, Pharmaceuticals and Amgen were both up more than 4%. The Wall Street climbed 153 points to close on 16,897. The US Tech 100 gained 44 points to end on 4,335 spot 13, and the US 500 added 22 points to close at 1,955 spot 88. Looking at commodities, gold was little moved yesterday, down $1.40, closing at $1,145.30, and Brent crude has remained above the $50 mark, closing yesterday at $51.74 a barrel. Royal Dutch Shell on Tuesday warned of the risk of a spike in oil prices should OPEC keep pumping flat out in the face of an expected decline in output after spending cuts by energy groups outside the producers' cartel. The unexpected resilience of US shale producers meant that it would take more time to rebalance supply and demand, said Mr. Van Beurden, who identified Saudi strategy and OPEC cohesion as key uncertainties. Saudi Arabia has traditionally been the world's swing producer, raising and cutting oil production to balance supply and demand, but OPEC's decision last November not to reduce output reflected Riyadh's determination not to play this role for the moment, and instead put pressure on US shale companies. Saudi Arabia is holding oil production at record levels of more than 10 million barrels per day. Meanwhile, Iraq, another OPEC member, has upped output to record levels, and Iran is poised to raise its production assuming Western sanctions against the country are lifted. Shell is proposing to buy BG Group in a deal due to complete early next year, and Mr. Van Beurden said that capital spending by the combined group could be about 35 billion next year, less than the two companies are planning to invest in 2015. In Europe, we saw rise continue. The Germany 30 gained 157 points to close on 10,023 spot 9, and the UK 100 added 76.1 points to close on 6,369 spot 8. Anheuser-Busch InBev has launched a third bid for rival SABMiller, raising its cash offer to £42.15 per share, and adding a partial share alternative. In announcing its proposed deal, AB InBev said it was disappointed with the lack of engagement from SABMiller and urged its shareholders to compel the company accept its latest bid. The Belgian-Brazilian brewer said it previously had two offers rejected for SABMiller, one at £38 per share and one at £40. The new offer values SABMiller equity at £68 billion with net debt of £6.9 billion. SABMiller enterprise value would be £75 billion. Shares in SABMiller were up 2.9% at 37.28 in early London trading, while AB InBev shares were 4.48% up at €102. The bid by the world's top beer maker to buy its biggest rival is the most ambitious step yet for AB InBev, which has grown from a small Brazilian beer maker to the world's largest brewer. AB InBev is seeking to combine its stable of global brands, including Budweiser, Stella Artois and Corona, to SABMiller's long list of popular emerging market beers. AB InBev has also added a partial share alternative to the cash offer, where shareholders would receive £2.37 in cash and 0.48 restricted AB InBev shares in return for every SABMiller share. The restricted shares would be subject to 5-year lockup and would be unlisted for any exchange. Due to the lower value of the share offer, AB InBev said it expects its most SABMiller shareholders will likely accept the higher premium cash offer and, should they wish to, reinvest their proceeds in AB InBev's listed ordinary shares. Shares in Deutsche Bank gained in early European trading as its chief executive John Crean prepared to try persuade investors that a €6.2 billion third quarter net loss is evidence the bank is getting its house in order, and not evidence that things are getting worse for the German's biggest bank. The bank admitted in an unscheduled announcement on Tuesday night that the loss could wipe out the annual dividend that Deutsche has symbolically paid throughout the financial crisis. The bank had been expected to pay a €0.75 dividend for the year. The bank's shares had fallen more than 6% in after-hours trading in New York. However, in Europe, the shares rallied from small early losses to trade 1.5% higher at 25 euros spot 8. The bank blamed 5.8 billion euros of the loss on a goodwill write-off at its investment bank and a shortfall between how retail subsidiary Postbank is valued on Deutsche's accounts and how much it expects to gain from selling it. Deutsche is also setting aside another 1.2 billion euros to deal with the continuing slew of litigation that has dogged the bank in recent years. The other 600 million euros charge is for reduction in the value of Deutsche Bank's 19.99% stake in China's Huaxia Bank, which the bank has designated non-strategic, fueling rumors that it will sell it. In today's corporate news, in its interim results, Tesco said UK sales were down 1.1% in the second quarter. Diageo has sold its 58% share of Desnos and Geddes to Heineken for £515 million. Sports Direct has announced a potential acquisition of 50% of Irish firm Warrnambool and parent company of Heatons. Ahead of its half-year results next month, Tate & Lyle said its trading performance is in line with its expectations and its full-year guidance remains unchanged. Ladbrokes has appointed Christoph Fahy as its Chief Marketing Officer. He will oversee all brand and marketing activity across digital and retail. And in its trading update for the first quarter, Dunelm said its trading was strong both in-store and online, with an overall sales growth of 5.5%. In today's economic data and focus, at 12 o'clock the Bank of England vote on UK interest rates. At 12:30 the Eurozone ECB monetary policy meeting accounts. And at 1:30 p.m. US initial and continuing jobless claims are released, and at 7 o'clock US minutes are released from the Fed's latest policy meeting. That's all for this morning's market update. Thank you and goodbye.